Hey there. Today I was looking at a client's QuickBooks file, and this is a client that just came to me, and they were having issues with their QuickBooks file, and so they had come looking for support and trying to get it sorted out. They knew something was wrong. They had a significant amount sitting in their checking account, which was not reflecting what was actually in the bank balance, or like actually in the bank account. So they knew something was wrong, but they didn't know how to fix it. And so what they said to me was that their bank account had been reconciled to the end of September, say. And so to me, what that meant was that the bank account was accurate to the end of September. But when I went and I looked in the actual account, there was a bunch of stuff in there that was not reconciled. And so I wondered if maybe there was like a disconnect between what reconciled sounds like and what it actually is. So doing a bank reconciliation means that you are checking the bank statement transactions against what is actually in your QuickBooks file. And we do that by, in QuickBooks, there's a reconcile function, and you put in your beginning and ending balance. If this is not the first time that you've done a bank rec, then that opening balance will already be in there. But if it's the first time, you can put in your opening balance and your closing balance and the date. So the ending date of your statement, and you say okay, and you get to the next screen, and it just lists all of the transaction that QuickBooks has in your account that you're reconciling. And our job is to take our bank statement and go line by line, just check them off in QuickBooks, like actually physically hit the check mark button. And if there are any transactions that are on the statement that are not in QuickBooks, then we have to enter them. And if they're more importantly, well, not more importantly, but more commonly, what happens is there are transactions that are in the checking account or in the bank account that we're reconciling that don't belong. So they're in QuickBooks, but they are not on the statement. And that's a problem. Sometimes, I should say, sometimes this happens and it's legit. Like you've written a check, and in QuickBooks, you've entered the check, but the check hasn't cleared your bank yet, like it hasn't been cashed. So in that case, yeah, it belongs in the bank account even though you haven't seen it on the bank statement, because you know that in the future, it will be coming out. Now, if it's, 6 months goes by and the check still hasn't been cashed, that's a whole other story. But there are specific instances where, yes, you will have things, usually at the end of the month, where they haven't actually gone through the bank account, but you know for sure that they will. The problem is when we post things to the bank account, but it doesn't ever go through the bank account, and we end up with an inflated bank account balance and some other number that's been affected. So usually the case, what happens is that we have written an invoice and then we received payment on it. So then we went into QuickBooks and we said receive payment, and we knew we were going to deposit into the checking account. So we received that payment into the checking account. So now in QuickBooks, our account shows an increase of the payment we just received, right? We just got cash for it. And then we are doing our bookkeeping, or maybe somebody else is doing the bookkeeping, and the bank feed within QuickBooks will show the deposit that we made. So let's say we received $100. It was an invoice for $100. We received a check for it. And so we went into QuickBooks and we received the payment on it. And we received it into the bank account because we're like, well, I'm just going to deposit that today. And then you do, and you deposit that check. You've already posted the receipt in QuickBooks, and you've already posted it to the checking account. Now QuickBooks is going to bring in the bank transactions, and it's going to show you that deposit. If it doesn't get matched, if it gets added as another transaction, then you've duplicated that deposit, basically. So what happens is you end up overstating your income because you've said that deposit was sales, but you already have the invoice that you recorded, which is also sales. So now you've got two for the same amount. And when we go to reconcile the account, we will have multiple transactions. We'll have two lines that are the same number. And we'll check off one of them because one of them shows on the bank statement, and then we'll click reconcile. And that's what happened in this particular file, is that invoices were being generated and there were payments being received into the bank account. And then whoever was doing the bookkeeping was seeing those deposits but not matching them to what was already in QuickBooks. They were just creating a new sales entry. So that ended up creating a couple $100,000 sitting in a bank account that didn't exist. It wasn't actually in that account, and it inflated sales by 200,000 because every time we had a deposit that wasn't matched, we created another sales transaction. So you can see that that can cause significant issues because now we have to go through and figure out what transactions are real and what aren't. I have some tips and tricks if that's your situation and you're having trouble with it. I have a few things that I like to do that it's easy to sort of pull out what's going on and which transactions are which, but I'm not going to get into that just now. But if you have a question about this or this is your situation, leave me a comment and I'll give you some tips as to how to go about finding which transactions are which. This problem, though, it's very difficult to spot if you're not reconciling every month. So I really recommend every month you get your bank statement, whatever day of the month you get your bank statement, and pull it out and compare to what you have in QuickBooks, and just make sure you don't have any transactions that are in your account that don't belong, or that you're not missing anything, because if you're missing expenses, that means you're paying too much in taxes. Bank recs are maybe not the most exciting part of bookkeeping, but they're definitely one important piece of it. And if you do that every month and you get to the end of the year, then you know you're right for the whole year, and then your checking account or your bank account and your credit card amounts will be accurate. That's right, you can reconcile your credit cards too, and I recommend those also. If you have questions about reconciling, or again, if you are in that situation where you know that your account is not quite right, let me know in the comments and I'll try and give you a hand on that. I have included a link to my newsletter. You can get accounting and bookkeeping tips every week. It's free, so sign up. I mean, only if you want to, obviously. I hope you're doing well, and I'll see you tomorrow.